This is the Friday, August 28th, 2015 version of the Market Plus segment. Joining us now is Darin Newsom. Darin, welcome back.
Thank you, Mike.
It's hard to believe it is the last week in August already.
It is. I mean, it just flown so fast. 2014-15 year, among other things, is over.
Yeah.
For corn and soybeans, the summer's gone. Summer's over. We're heading full force into fall at this point.
Full force into fall and harvest.
And fall harvest.
And we've got a question here from our buddy Phil in Ontario, Canada. And you talked a little bit,
Yep.
the lone corn bull standing. And Darin is curious, could $4 corn be back by December, buoyed by actual combine yields?
Yes. I think we could see corn, D's futures, cash price possibly, national DTN National Corn Index back above 4. What's it going to take? Combines rolling, finding out that the yield's probably not there. The 168 bushel per acre national average yield. If it's not there, could give corn some room to move a little bit higher here through the fall, heading into the end of the year.
Now, in central Iowa and in a lot of places near large mill plants, there has been a fairly substantial basis here for corn delivered in the last week, 2 weeks, and on into the future. What's your take on the corn, the actual grain structure in the countryside? Could we see $4 corn if all these farmers have clear bins and they're just going to stockpile everything and shut the gates? Or at 164, 165 national yield, are we still going to have too much grain to moving into the elevators by necessity?
Well, that brings up a whole list of possible answers. One, do we have the stocks that we're told that we do? We won't know that, theoretically, until the end of September.
But the market knows, Darin.
But the market knows, and that's what's interesting about these basis moves. We've seen it at the Gulf, we've seen it here in the Midwest. If we have all of these bushels left over, and farmers are moving the last of the 14 crop to town now to get them out of the way before this huge, this third largest crop supposedly comes on in 2015. Why the basis strength? Why the need for cash corn at this point? We're not shipping a lot of corn. Ethanol production isn't supposed to be that outstanding in the end of 14-15 and going into 15-16. So these things don't really seem to mesh out all that well. Now, also, you do see basis firm when the futures market comes down. But if we were in a situation where farmers were moving the end of the 14 crop to town, you wouldn't see merchandisers pushing basis. So I think it raises a lot of questions that aren't going to be answered anytime soon. But as you said, and as we've talked about many times, let's let the market figure this out. Right now, seems to be saying it needs some corn.
Okay. Now, I do want to jump. We didn't get a chance to discuss cotton on the program, and cotton was really kind of the only Cinderella story last week, up when everything else was down. This week, cotton, China's in the news. Cotton takes it on the chin, down 390, thereabouts. What's your take on cotton going forward?
As you said, it's been kind of the one of the few holdouts trying to go up. And it's been supported by a lot of commercial buying. We saw future spreads in very strong uptrends. I mean, there seemed to be some demand coming in, possibilities of shorter supplies, and then boom, all of that changed this week. We saw the spreads take a nosedive, pulled the December contract down, basically erasing the uptrend that had been in, pulled it right back into a sideways trend at best. It's just the word of the week. It's China. I mean, it's news here, it's news there, but it always seems you pull the string far enough, and it always seems to come back to China. It certainly seemed to come into play in the cotton market again. I think the real telling point is going to be this coming week. If cotton can stabilize, if the D's contract can gain some of that bullish momentum back, if the spreads can turn back higher. We see another bearish week in future spreads. I think the cotton market's probably done for a while, and I think it's going to head lower.
Heading back into a downtrend.
I think it's going to break out of this sideways pattern that's trying to hold some old support, and if it can't do that, then it's back into a downtrend.
Okay. All right, now we want to jump over into the livestock markets. We've got a question here from Josh. He's on Twitter at Chartboy. And Josh is curious, is the cattle market today based on fundamentals in a seasonal or counter-seasonal trend?
Yeah, I saw that question come across, and it's a fascinating question because by its very nature, historically, not necessarily anymore, but historically, seasonal patterns were fundamentals. I mean, that was the fundamental cycle of supply and demand. So if you saw a seasonal pattern, and if a market was following its seasonal pattern, it was in step with its normal supply and demand situation. It's changed a little bit now, and as we look at the live cattle market, as we talked about in the show, it looks like cattle's going to try to go up right now, and if it does, it's going to be in step with what we see here, say over the course of the fall on its seasonal charts. But fundamentally, there's nothing spectacular out there in the cattle market at this point. So if we see a seasonal move, it's going to be more from the non-commercial or the investment side, looking at the sell-off in cattle and saying, hey, there's a little bit of an opportunity in here, a little bit of a gap, but we can jump in, push this market up a little bit without the aid of having overly bullish supply and demand. What that leads to, though, is the next round of selling. When they get out, you kind of have a vacuum underneath this market, and it could cause a bit of a problem.
What does the vacuum underneath this market, live cattle market, look like as far as what's the downward risk should we get an upswing?
Depends on how far and how fast we push this. If there's just absolutely no commercial support in this thing whatsoever, then we saw the low that we posted this week in October, December contracts, and we rallied well off of those through the weekly close. We would expect to go back below those lows that we saw this week, possibly going another $3, $5, $6 lower beyond that.
Oh, wow.
As well.
So low 130s.
Yeah, because then once it really starts rolling, then it could really get a lot of pressure put on it.
Jump the investors right back in. Head right
and again,
back down.
then that would be a counter-seasonal move if that occurs over the course of the winter. But then at some point, maybe different fundamentals start to come into play.
Okay. Now, I want to talk about a crop we haven't talked about on this program in a while, and you being the native Kansan, we're glad to have you here. Jay in Alva, Oklahoma is curious. With what appears to be a bumper grain sorghum crop coming, will it pay to store or should it be marketed now? And again, with China in the news, what's your take on sorghum?
Grain sorghum milo is a real difficult crop because we saw this incredible demand in the 2014-15 marketing, record exports for U.S. milo. Then we saw more acres planted. And then they had, milo needs one rain. They got more than that this year. So the milo crop looks great. And as he points out, looks like we're going to have a huge crop. Problem is if demand goes away. If China turns its attention back to buying corn because corn's so cheap in relation to milo, then all of a sudden we've got all this milo on hand. If you store it, and let's say you have hedges against it, basis could collapse, and so that doesn't gain you much. It protects you in the futures price. You're almost going to have to just make some forward sales on the milo market if we get that rally to these corn like what we were talking about, and basis holds firm. I don't know that I would want to store and take a basis risk in the milo market here going into 2015-16 marketing year.
Given the uncertainty in demand out there.
Given the uncertainty in demand and the potential for huge supplies of milo on hand.
If China steps back.
That was the one thing that drove the milo market this last year. And if they switch gears and go back to corn, all of a sudden we've got lots of milo with no place to go.
Yeah.
And that's never good for basis.
Right. Now, before we let you go, I want to talk about this crude market, because crude oil was similar to the equities in just a roller coaster all week, ended higher, $5 almost higher. Where do you think it's going from here? From a chart perspective, what does this week look like to a technical trader?
To a technical trader, the crude oil market is absolutely fascinating from a technical point of view. And what it looks like it did this week on its weekly chart alone was establish this spike reversal. So that would tell me that this market should want to go up. The problem is when the market was going down, we saw future spreads start to trend up. So we saw a little bit of commercial support on the idea supply and demand was going to start to change. The very week, and it was only here at the end of the week that the futures market started to rally again, spreads immediately turned down. So this is telling us there's still so much supply out there, and that we're coming into a time of year when demand's not that strong. If we see a rally, which it looks like it should get, some sort of rally, follow-through rally off of Friday's move, I'm going to imagine that there's going to be plenty of pressure continue to build on this market. Long term, I don't know that we've finished off its downtrend. It could try to stabilize in here if we can close, August above the July settlement is going to be the key to me, I think, long term as to where we might go this market. Still, moving to a new low this month doesn't really shed a lot of light on that we're done with this long-term downtrend. So I think we're going to see a lot of things continue to play out in the crude oil market, but the higher it goes, the more pressure we see from the actual fundamentals.
Good place to be a seller in here with these commercials at 45, 46, 48 if we get it?
If we get it. I might give it a little bit more room. I mean, because once you get the investment side moving, they'll stay in it 2, 3, 4 weeks, without the backing of fundamentals. And then if for some reason the fundamentals change, they can really get excited. But at that point, that's when they might start to cash in their chips. They're seeing that the fundamentals aren't changing, really starting to be a drag on the potential gains, further gains. That's when you probably want to step in and try to take advantage. Don't really have a target at this point. Could it be 45? Could it be 50? Could it be 52? All of those are possible. Again, this thing can move very quickly, very volatile, and it's expected to stay volatile. But I would certainly look at something up here in the near future.
All right. Well, Darin Newsom, thanks for taking the time to join us here this week.
Thank you, Mike.
Thanks to all of you for sending in your questions via Facebook and Twitter. Please continue to do so, and we will get expert analysis right to you. Thanks for watching, and have a great week. Wonderful, Darin Newsom.